Hello everyone, welcome back to the channel. Today we'll be solving some questions and we will discuss some important concepts. Okay, so to start with, let's solve question number 14, page number 54. This is one of the most important questions in chapter number 1. Okay, and even the most difficult question as per students. Okay, but actually it's not that difficult if we do it with some understanding. Okay, so let's read the question. F and K are partners in a firm. F is entitled to a salary of rupees 20,000 per month and a commission of 10% of net profit before charging any commission. Okay, so F is entitled to a salary of 28,000 per month and a commission of 10% of net profit before charging any commission. Okay, K is entitled to a salary of rupees 70,000 per annum. Okay, see, this is per annum, this is per month. Okay, per annum means 1 month 28,000 and per month means 1 month 28,000 and per annum means 70,000 in a year. Okay, K is entitled to a salary of 7,000 per annum and a commission of 10% of net profit after charging all commissions. Okay, he will get commission of 10% of net profit after charging all commissions. Okay, now net profit before charging any, this should be any. Okay, before charging any commission for the year ended 31st December 2011 was 4,62,000. Okay, so the net profit before charging any commission for the year ending 31st December was 4,62,000. Okay, pass necessary journal entries and show the distribution of profit between the partners. Okay, so the requirement of the question is to pass necessary journal entries and to show the distribution of profit between the partners. Okay, so I hope the question is clear. If you want, you can read the question again. Okay, so we will now begin with the solution. Okay, now before that, let's do some working note. Okay, let's do some working note. Okay, so the first thing, wait, there is some problem with this. Salary of 28,000 per month before charging commission. Okay, before charging commission. Okay, now see, what is the first thing which the question has given? F is entitled to a salary of 28,000 per month. Okay, so F's salary 28,000 into 12. Okay, so what is the answer? 3,36,000. 3,36,000. Done. Now, and the commission of 10% of net profit before charging any commission. Okay, so what's F's commission is equal to 10% of net profit before charging any commission. 10% of net profit before commission. Okay, so what is the net profit before commission? It's given in the question. See, net profit before charging any commission was 4,62,000. Okay, it was 4,62,000. So what is the amount of commission F will get? 46,200. Okay, clear? No doubt up to this point. Now let's talk about K. Okay, K is entitled to a salary of 70,000 per annum. Okay, so K's salary is equal to how much? 70,000. Okay, no problem up to this point. Okay, now K is also entitled to a commission of what? K is entitled to a commission of 10% of net profit. 10% of net profit after charging all commission. Okay, now the important part will come. Okay, this was very simple up to this point. Now we'll have to calculate K's commission. Okay, we have to calculate K's commission. K is getting how much? 10% of net profit after charging all commission. 10% of net profit after all commission. Okay, so see, what has the question given us? The question has given us net profit before charging any commission. Okay, so can I use this net profit to calculate K's commission? No, I cannot use this because the requirement of the question is 10% of net profit after all commission. Okay, so the question has given us profits before any commission. Okay, now what will be the task? Our task will be to calculate net profit after charging the commission. Okay, so what will be the net profit after charging the commission? Net profit after commission. See, the question has not only said after commission, the question has said after charging all commissions. Okay, after charging all commission. What do you mean by after charging all commission? This simply means that we'll have to calculate net profit after charging all commission, which simply means we'll have to calculate net profit after charging the commission of F and K. Okay, we'll have to calculate net profit after charging commission of F and K. See, we know the commission amount of F, but we don't know the commission amount of K, right? This is what we have to search. We have to calculate. Now, the problem is we have to calculate, see, we'll have to calculate K as commission, and we have to calculate net profit after charging all commission. Okay, so how will we do this? Let's try to solve. Okay, this is the most important part of this question. Okay, so now can I say net profit after all commission is equal to net profit before commission? We have the net profit before commission. Okay, now out of this net profit before commission, we'll have to deduct the commission allowed to the partners. Okay, so less F's commission less K's commission. Okay, if I reduce net profit F and K's commission from profit before commission, I will get the net profit after all commissions. Okay, so what is the amount? The amount of net profit before the commission is 4,62,000. 4,62,000. F is getting commission of how much? We have calculated 46,200. 46,200. But now, do we know the amount of cash commission? No, because this is what we have to calculate, right? So we have a problem here. Okay, now can I say net profit after F's commission but before K's commission is how much? See, out of this net profit before commission, we have the commission amount of F. Okay, so if I reduce this to, if I deduct 46,200 from 4,62,000, I will get 415,800. So this is the amount of net profit after F's commission but before K's commission. Okay, so now see, the question has given us that K is entitled to a salary of and a commission of 10,000, a commission of 10% of net profit after charging all commission. Okay, after charging all commission. Now see, we have the net profit after charging commission of F. Okay, but we don't know the value of K's commission. Okay, now can I say this amount of 415,800, okay, this net profit includes K's commission? Can I say that? This 415, let me repeat it again, this 415,800 includes the commission of K. How? See, the question has said K is entitled to a commission of 10% of net profit after charging all commission. Okay, so basically we have to calculate net profit after charging all commission. Okay, so but we don't know the amount of K's commission. Okay, we don't know the amount of K's commission. So what will happen? Here we have calculated, the question has given us the net profit before the commission. Okay, before deducting commission. Okay, from this net profit we have deducted F's commission because we knew the figure. Okay, now this net profit is after deducting F's commission but before deducting K's commission. Okay, so now this net profit, okay, will be inclusive of K's commission. Okay, this net profit will be inclusive of K's commission. Okay, so what is the commission rate? What is the commission entitled to K? It is 10% of net profit after charging all commission. Okay, so this 415,800 includes the commission of K, that is 10%. Okay, now this profit includes 10% commission of K. Okay, now how will I calculate case commission? How will I calculate case commission? See, this 415800, okay, this 415800 includes 10% of case commission. Okay, now how will I find out the case commission? I know that this includes 10% of case commission. Okay, and this 415800 is 110%. What do I mean by 110%? Out of this, 100% is for net profit after all commission. Okay, and 10% includes case commission. Okay, so this is 110% of 100%. This is 110% out of 100%. Okay, so this includes case commission as well. So in this way we can find out case commission. Okay, 37800. So this is the value of case commission. Simple, easy. Because see, you have to solve this question 2-3 times. Okay, then only you will understand. Okay, don't try to by heart. Just remember that we have given net profit before charging commission. Okay, so before charging commission, and the requirement of F commission was 10% of net profit before charging any commission. So it was very easy to find out the commission of F. Okay, but now the challenge is to calculate the commission of K. Okay, so the commission of K is to be calculated on 10% of net profit after all commission. After all commission. Okay, so from the net profit before charging the commission, we have reduced F's commission. Okay, and we'll have to also reduce what? We'll have to eliminate case commission, right? We'll have to eliminate case commission, then only we'll get net profit after all commission. Okay, we'll have to eliminate case commission, then only we'll get net profit after commission. Okay, I hope you have understood. Okay, so this 415800, okay, includes case commission also, na? Okay, so this 4150 includes 10% of commission and 100% of the profit. Okay, so can I say this is 110%? Okay, so if this is 110%, okay, so let's see, let me do it again. 51800. If this is 110%, if I divide it by 110%, I get 1% of the value. Okay, so if I have to calculate commission, I'll have to into by 10. Okay, so I'll get the commission amount of K. Simple, easy. Okay, so this is, I've calculated this. I will need all this. Okay, we'll need this for our further answer. Now see, we have done the working. Now we'll have to show the distribution of profit between the partners. Okay, for this we'll prepare profit and loss appropriation account. Okay, so now here by net profit. Okay, now net profit. See, the question has given us the net profit. This net profit is before charging any commission. Okay, so this profit is before charging any commission. So we obviously need net profit before charging any commission. Okay, apart from that, we will need net profit before charging salaries and commission, because see, we have calculated the separate salary figure has been separated calculated, so we'll have to show the distribution of salary here to salary, okay, to commission, then the profit will be distributed. Okay, so how will we find out the net profit amount? Because see, why are we doing this? Okay, you may have a question. I have told you, right, that salary to a partner is an item of P&L appropriation account. Okay, salary to a partner is P&L appropriation account. So all the salaries to a partner, remuneration to a partner, commission to a partner will be provided in the P&L appropriation account. Okay, but the question has given us what? Profit after charging commission, after charging salary but before charging commission, right? Okay, so what has happened? This profit has been this salary to the partner. Okay, the salary has been provided in the P&L account. Okay, so that is not correct. We need what? Net profit before charging any commission and salary. Okay, before charging any commission and salary. So how will we find net profit before salaries and commission? How will we find? See, we have the figure of net profit before commission is 4,62,000. Okay, 4,62,000. In this, if I add the salary amount, of the partners, will I get net profit before salary and commission? Yes, I will get. Okay, so what is the salary amount? 3,36,000 plus 70,000. Okay, so this way I will get the net profit before salary and commission. Okay, so this is the figure which I need for my profit. Okay, wait, 4,60,000 plus 36 plus 70,000, 8,68,000. Okay, let me repeat this part again. Okay, if you don't have doubt in this part, see, I have told you that all the items related to partners, P&L appropriation account. Okay, all the items related to partners, like the interest on capital, okay, interest on drawings, salaries, remuneration and commission, will be an item of P&L appropriation account. Okay, will be an item of P&L appropriation account. Now when you prepare your profit and loss account, okay, you will have this net profit. Okay, now this net profit will be transferred to P&L appropriation account. Okay, so this net profit which has been transferred to P&L appropriation account, okay, this profit should be profits before any salaries and remuneration or commission to the partner, right? Now out of this profit I will reduce the salaries, I will reduce the commission. Okay, so here I will need net profit before any payment to the partners. Okay, so but the question has said that this is the net profit before charging any commission. Okay, so this simply means salary has been charged. Okay, and this figure of profit is after charging salary, so we'll have to add back the salary. Okay, I hope it is clear to you. Now let's provide the salaries and all. Okay, so here to salaries, okay, to salaries, F and K. F is getting a salary of 3,36,000 and K is getting 70,000. Okay, so what is the total? 4,06,000. See, we have calculated in the working note. Okay, we have calculated in the working note this one. Okay, now we will provide commission to commission, F and K. Okay, so what is the amount of commission? F is getting 4,46,200, 46,200, and what is the amount of commission? K is getting 37,800, 37,800. So what is the total amount? 84,000. Okay, so what was the requirement of the question? We had to show the distribution of profit. Okay, so nothing else is to be provided. Now the balance amount will be transferred to F and K's capital account. Okay, so if you add this, the total, what's the total of this? 86800, 868,000. So this side will also be 868,000. Okay, so if you less this two item, you will get the profit amount. Okay, so the profit amount is 3,78,000. Okay, now nothing has been mentioned about the profit sharing ratio. Okay, so the profit will be shared equally. Okay, so divide by 2, you will get the profit of F and K. Okay, so this way we have completed the first part of the question. Okay, which was we have to show the distribution of profit between the partners. Okay, I hope you are clear. Okay, this commission part is a bit tricky. Okay, this commission part is a bit tricky, but I hope it's not that difficult to understand. Okay, because we have to calculate commission of F, right? And the commission which we have to calculate is on net profit after charging all the commissions. Okay, so which simply after charging all the commissions simply means the net profit on which the commission will be calculated should be after deducting K's commission. Okay, which simply means that the figure, this figure includes K's commission also. Okay, so if K's commission is 10%, this will be 110%. Simple. Okay, 10% of the commission and 100% of the profit. So if I take out 10%, how did I take out 10%? If this is the amount, if I divide by 110, I will get the 1%. Okay, and if I into 10, I will get the commission amount of K. Okay, now let's move to the second part. Okay, let's pass journal entries. Second requirement of the question is to pass journal entries. So journal entries. Okay, what is the format of journal entry? Wait, let me do it nicely. This will be debit, credit, ledger folio, and date, particulars. Okay, so what is the first amount? Salary. Okay, salary will be given to the partners. Okay, now how will we pass the journal entry? How will we pass this journal entry? Salary is an expense. Okay, salary is an item of nominal account. So salary basically it's a loss for the firm. Okay, they are giving salary to the partners. Okay, so whose capital account is increasing? Partners capital account is increasing. Okay, so we all know that capital is a liability for the firm, so increase in liability will be what? Credited. Okay, and what will we debit? We will debit salaries account. Okay, we will debit salary account because salary is an expense. Salary account debit to salary account debit to FNK, to F's capital account, to K's capital account. Okay, so what is the narration? Being salary due to partners. Being salary due to partners. Okay, now see, we have simply transferred it to capital account. Okay, we have not given the salary, we have not paid the salary in cash. Okay, this is the reason why we used to transfer it to credit partners capital account. Okay, we have increased the capital balance. Okay, we have not paid it in cash. So what is the amount we have calculated? 3,36,000 and 70,000. Okay, so what is the total amount? 4,06,000. 4,06,000. Okay, this is first entry. What is the second entry? Commission. Okay, commission account. Commission is also a loss for the firm because the firm is paying commission to partners. Okay, so the partners capital account is increasing to FNK. What is the amount? 4,62,000 and 37,800. Why am I always saying 4,62,000? This is 46,200. Okay, so the total amount is 84,000. Same narration, being commission due to partners. Okay, see, I to see now it has been transferred to partners capital account. Okay, so partners is not that partners cannot withdraw. Okay, they can withdraw the money whenever they want. Okay, they will withdraw the money in cash whenever they want. Okay, so what is the third entry which we will pass? Third entry is for profits. Okay, see, first salary, they have got salary, commission, then the third is for profit. Okay, so what will be the entry? What will be the entry? Profit and loss appropriation account, debit to F to K. Okay, so what is the amount of profit? 1,89,000 each. 1,89,000, 1,89,000, and the debit side will have 3,78,000. Okay, done. So this is the 3 entry which we will pass in regards to the question requirement. Okay, so now I have told you that salaries and commission is a nominal account, so the salary and commission account has to be closed, okay, at the year end. So we will transfer this to P&L account. Okay, we will close this account. So how will we close? If salary is debited, okay, how will we close it? We'll have to credit it. If commission is debited, how will we close it? We will credit it. Okay, so where will we transfer it to? Profit and loss account debit to salary to commission. Okay, so 4,06,000 and 84,000. The total is 4,90,000. Okay, so this is the end of the question. I hope you have understood. Okay, you solve this and you try to practice it at least 3 times. Okay, and you try to watch this video. If you want, you can watch a number of times. Okay, it's basically available free on YouTube. So you solve this question. This is very important question, okay, from your exam point of view. This is a bit tricky one, okay. You will be confused in this part only, okay. And if you can solve it 2 to 3 times, and if you the more time you watch the video, okay, the more you will understand the concept, okay. So I hope you have understood the question, okay. Now the next thing which we will discuss about is interest on drawings, okay. The next thing which we will discuss about is interest on drawings. Very important concept, okay. Last year about I said 2000 this exam, class 12 exam, okay, board exam, there was 3 or 4 marks question about the interest on drawings, okay. So it's very easy and very simple, okay. Now let's try to discuss about interest on drawings, okay. Where is that interest on drawings? Okay, so we'll calculate the methods of calculating interest on drawings, okay. I don't think I should repeat the meaning of interest on drawings and all, okay. So we will directly jump into methods of calculating interest on drawing. Methods of calculating interest on drawings, okay. So it's very simple, okay. You will understand it. It's very easy and it's very simple, okay. Basically you can refer it page 21 of your textbook, okay. So there are 6 cases, okay. There are 6 cases. Let's discuss each cases, okay. We'll discuss cases from 1 to 6, and we'll understand in a logical way, okay. In a very logical way we'll understand it. See, case number 1. Mr. Mohan withdraws rupees 2000 per month at the beginning of every month for the year ended December 31st 2015, okay. Interest is calculated at the rate 10% per annum, okay. Interest is calculated at the rate 10% per annum, okay. Now how will we calculate interest on drawings, okay. See, how will normal people who don't want to understand this logic will calculate, okay. See, what will they do? They'll say calculation of interest on capital, okay. Now let's try to understand it with the timeline, okay, before we move further, okay. See, the year is ending on 31st December, okay. 31st December. So it will start on 1st Jan, okay. So Mr. Mohan withdraws 2000 per month, okay. He withdraws 2000 every month. So Jan, Feb, March, April, May, June, July, August, September, October, November, December, okay. So he will withdraw 2000 here, sorry, beginning of every month, okay. So beginning of every month. So he will withdraw 2000 here, 2000 here, 2000 here, 2000, 2000, 2000, 2000 and so on, okay. 2000. Now see, he's withdrawing 2000 every month. Now this 2000 which he has withdrawn on the 1st of January, okay, he will have to pay interest at the rate 10% for how many months? For 12 months, okay. Because interest is always calculated at the end of the year, okay. It is always calculated at the end of the year. Now he'll have to pay interest on drawings for 12 months because he has used this 2000 rupees for how many months? For 12 months, starting from Jan to December. Simple, okay. Now similarly, he has withdrawn 2000 on 1st Feb, okay. Now he'll have to pay interest for how many months? From February to December. He'll have to pay interest for 11 months. Okay, again on 1st March he has withdraw 2000, so he'll have to pay interest for 10 months starting from 1st March to December. Okay, March, April, May, June, July, August, September, October, November, December, 10 months. See, he'll have to pay interest for 12 months here, 11 months here, 10 months here, and so on. Okay, so this will continue, this will go on. Okay, so how will normal people calculate interest on drawings in this case? See, how will they calculate? How will they calculate? They will do is, what they'll do is Jan to December, 2000 into 10% for 1 year. Okay, 200 rupees. Then again they will calculate from Feb to December, 2000 into 10% now for 11 months. Now, because you'll pay interest on drawings for the number of months which you have used the money. Okay, see, if it is from February, you have taken on the 1st, you have withdrawn money on the 1st of Feb, so you'll use this money till December for 11 months. Okay, so again they will calculate how March to December. So now you have used 2000 rupees for 10 months. Okay, so is it possible to calculate this way? Okay, this you will get for 3 marks. Okay, for 3 marks you will spend around 10 minutes. So is it possible to calculate it this way? No, it is not possible to calculate it this way. Okay, so how will we calculate? We will apply the average method. What method will we apply? We'll apply the average method. Okay, we'll apply the average method. Okay, and we will calculate interest on drawings. Okay, so what teachers will do, you know, they will let you by heart the conclusion which is given in page number 22. Okay, they will say you by heart this, but this is very bad way. Okay, you will not be able to by heart, you will be confused. Okay, because see, if you are sitting with a textbook, you will see first is 6.5, 7.5, 9, 6, 6, 6, 6. How will you remember? Okay, it's not possible to remember, so we will solve it in a easy way, in a better way. Okay, let me first remove these things. We will solve it in a better way. Okay, in a more logical way. Okay, so we will apply the concept of average method. Okay, we'll apply the concept of average. Okay, so we'll calculate interest on drawings using the average method. Okay, now see, I hope you have calculated average. Okay, how is average calculated? How is average of anything calculated? Average simply means opening balance plus closing balance divided by 2. This is how you get average. Okay, this is the formula in a way. Okay, you can say average is, what is the formula of average? If you have to calculate average, opening balance plus closing balance divided by 2. Say for example you have to calculate average stock. Okay, you have to calculate average stock. The opening stock is, say for example, 20,000, closing stock is 10,000. Okay, so what will be the average stock? It will be 15,000. Okay, so this is the meaning of average. Now see, now we will have to analyze the question. Okay, let's analyze the question. See, here you are Mr. Mohan is withdrawing 2000 per month. He is withdrawing 2000 per month. Okay, that means he is withdrawing 2000 every month. Okay, at the beginning of every year for the year ended. So in order to calculate the drawings, okay, what we need the amount of the drawings. Do we have the amount of the drawings? Yes. The next thing we need is rate. Do we have the rate of drawings? Yes, 10%. We have the rate. Okay, now what is the problem which we will face is the period. Okay, for how many periods we will calculate, because from here if you see it will be for 12 months, from here if you see it will be for 11, from here if you see it will be for 10, from here if you see it will be for 9, from here it will be for 8, it will be for 7, 6, 5, 4, 3, 2, 1. Okay, so it's not possible to calculate that way, so we'll apply average method. Okay, see how we will do. Okay, so let's solve. Solution. So let's solve. Now I have the amount. What is the total amount withdrawn? What is the total amount withdrawn? I have withdrawn 2000 every month. Okay, for 12 months. So the total amount withdrawn is 24,000. Okay, the total amount withdrawn is 24,000. What is the rate? The rate is 10%. Now I need period. Okay, now I need period. So for this I will calculate average period. Okay, I will calculate average period. See, the thing which I need is the period. Okay, the period for how many period I have used the money. Okay, the periods. Now I will apply average period. Okay, so in order to apply the average period, what will I need? I will need what? I will need opening and closing period. Okay, I will need opening and closing period. Okay, so see, how will I find out the opening and closing period? What will be the opening period? Opening period will be period left after first date of drawing. Okay, period left after first date of drawing. And what will be the closing period? What will be the closing period? Period left after last date of drawings. Okay, I have to calculate average. Average means opening plus closing divided by 2. Okay, so what is the opening period? First day of drawings. First day of drawings is the opening after first date of drawings. Okay, so what is the period left after first day of drawing? See, the period I have withdrawn here now on the first day of January. So the period left after first day of drawing is 12 months. Okay, see, I have withdrawn here. So 1 2 3 4 5 6 7 8 9 10 11 12 months. Okay, so the opening period is period left after first day is 12 months. Okay, and what is the period left after last day of drawing? What is the period left after last day of drawing? See, the last drawing which I have done is on 1st December. Okay, the last drawing which I have done is on 1st December. So what is the period left? 1st December to 31st December. Basically it will be 1 month. Okay, the period left is how much? 1 month. Okay, so closing period is 1 month. Okay, simple. Now you have to remember just this part. You just have to remember this part. Okay, in order to calculate the average period, we will need period left after first day of drawings, and closing period will be period left after last day of drawing. Okay, so now we will calculate average period. How will we calculate average period? It's simple now. Average period is equal to 12 opening period plus closing period divided by 2. Okay, so this will be 13 divided by 2. The answer you will get is 6.5 months. Okay, so now the average period is 6.5 months. Okay, so now I can calculate my interest on drawings. Okay, so what will be the interest on drawings? It's equal to total amount withdrawn was 24,000, rate was 10%, 6.5 divided by 12. Okay, so this is my drawings amount into 6.5 divided by 12 is 1,300. Simple. I hope you have understood. Okay, I hope you have understood. Now let's move with case number 3. Case number 2. Okay, what is case number 2? Mr. Mohan withdraws rupees 2,000 per month at the end of every month for the year ended December 31st. Okay, rate is 10% again. Rate is 10%. Now the main thing which we have to remember is 2,000 is withdrawn every month at the end of every month. Okay, it is withdrawn at the end of every month. So if I have to do the timeline, Jan, Feb, March, April, May, June, July, August, September, October, November and December. Okay, so this is 1st Jan, this is 31st December. Okay, now when is Mr. Mohan withdrawing 2,000 per month? At the end of every month. Okay, so basically he is withdrawing here at the end of December 2,000, at the end of February 2,000, at the end of March 2,000, at the end of April 2,000, at the end of May 2,000 and so on. Okay, so here he is withdrawing, the last withdrawal is in the end of December. Okay, now we know the amount withdrawn. Okay, in order to calculate interest on drawings, how will you calculate? Amount withdrawn into rate into period. Okay, we know that 2,000 has been withdrawn for 12 months, rate is 10%, but we need to find out the period. Okay, so now we'll calculate the period. Okay, so we'll calculate average period. What is the average period? What is opening period? See, what is the opening period? Period left after first day of drawing. Okay, so what is opening period? Opening period is period left after what? First date of drawings. How many period is left? See, first date of drawing is last of Jan. Okay, first drawing is on last of Jan. So how many periods are left after the drawings? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 periods are left. Okay, so how will I do? 11 months. Okay, and closing period is period left after last date of drawings. Okay, so when is the last date of drawing? 31st December. So is there any period left after 31st December? No period left. So the period will be, closing period will be 0 months. Simple. Now if I have to calculate average period, what will be the average period? Opening period is 11 months plus 0 divided by 2. It will be how much? 5.5 period, 5.5 months. Okay, 5.5 months. Now I'll apply here 5.5. So what will be the answer? 2000 into 12 into 10% into 5.5 divided by 12. So the answer is 1100. The interest on drawings is 1100. Okay, simple. Now let's move to case number 3. Okay, Mr. Mohan withdraws rupees 2000 per month at the middle of every month. Okay, for the year ended December 31st. Okay, rate is again 10%. Now again the same formula. Let's draw the timeline. Jan, Feb, March, April, May, June, July, August, September, October, November and December. Okay, so when is Mr. Mohan withdrawing 2000 rupees? Mr. Mohan is withdrawing 2000 rupees per month at the middle of every month. Okay, so he is withdrawing 2000 at the middle of every month. Okay, so basically he is withdrawing on 15th of Jan. Okay, I will take 30 days a month. Okay, 15th of Jan. He is withdrawing at the middle of the month. Okay, so first withdrawal will be on middle of January, second will be on middle of Feb, middle of March, April, March, June, July, August, September, October, November, December and so on. Okay, so the last withdrawal will be here, the first withdrawal will be here. Okay, now see, in order to calculate interest on drawings, what is the amount I need? I need amount withdrawn. We know that amount withdrawn is 2000. Okay, for how many months? For 12. How many times we have withdrawn? We have withdrawn 12 times. Okay, see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, we know that we have withdrawn 2000 into 12. Okay, rate is 10%. Now the main part is period. Okay, now let's calculate again the average period. Okay, we'll calculate average period. Now for this I will need opening period. What is the opening period? Period left after first date of drawings. What is the period left after first day of drawing? See, half month is left here because I have withdrawn the money on the middle of January. Okay, so period left after first withdraw is half month first, then 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 and how much? 10 plus 11. Okay, now don't be confused on the time of withdrawal. Okay, we have to see how much period is left after first drawings. Okay, till 31st December. 31st December is the last day of the year. Okay, so we have to see how many period is left after we have done the first withdrawal. See, here is 0.5 months is left. Now from here you will count the full month. Okay, 1 month, 2 month, 3, 4, 5, 6, 7, 8, 9, 10, 11 and 12. Sorry, 11. Yeah, this is December only, no? 11. Okay, 1, 2, half 1 2 3 4 5 6 7 8 9 10 and 11. Okay, so what is the period left? I will say 11.5, 11 months from here and 5.5 here. Okay, now if I say closing period, what is the closing period? Period left after last date of drawings. Okay, what is the period left after last date of drawings? See, the last date of drawings is, let me write it again. Okay, this November and December. Okay, so every month we will withdraw at the middle of December. Okay, so this is the point of withdrawal. So what is the last day after the point of withdrawal? Is 0.5 months. Okay, 0.5 months. Now if I have to calculate average, how will I find? 11.5 plus 0.5 divided by 2, it will be 6. Okay, 6 months. 6 months. Now can I calculate interest? Yes, I can calculate interest on drawings. Interest on drawings is 2000. I have withdrawn it 12 times, into rate is 10%, and it is for the average period is 6 months. Okay, so simple. Okay, so the amount will be 1200. Okay, now let's move to case number 4. Let's move to case number 4. Case number 4. Okay, so what is the case number 4? Mr. Mohan withdraws rupees 2000 per quarter at the beginning of every quarter for the year ended 31st December 2015. Rate is how much? Again 10% per annum. Okay, per annum means for 1 year, 10% for 1 year. Now again let's draw the timeline. Okay, this time we will do it in a different way. Okay, Jan, Feb, March, April, May, June, July, August, September, October, November and December. Okay, so see, so this is the timeline we have drawn. Now when is Mr. Mohan drawing 2000 per quarter? At the beginning of every quarter. Now I hope you know that there are how many quarters in a year? 4 quarters in 1 year. Okay, 4 quarters in 1 year, and 1 quarter will have how many months? 3 months. Okay, you can understand it this way. This is a circle, not a circle. So this is understand. Okay, this is a circle. So this is divided into 4 parts. Okay, so this will be 3, 3, 3, 3. So total is 12 months. So this will be first quarter, second quarter, third quarter, fourth quarter. Okay. So now, when is Mr. Mohan withdrawing? Mr. Mohan is withdrawing on 2000 per month, 2000 per quarter at the beginning of every quarter. Okay, so when will the first quarter start? On 1st Jan. So he is withdrawing on 1st Jan. Okay, basically this will be 1 quarter, this will be the second quarter, this will be the third quarter, this will be 4th quarter. So where is he withdrawing? He is withdrawing at this point, 2000 rupees at the beginning of the quarter. Okay, again he is withdrawing 2000 at the beginning of the quarter, again at the beginning of the quarter, again at the beginning of the quarter. Okay, now how many times he is withdrawing? He is withdrawing 4 times. Okay, 2, 2, 2, 2 each. Okay, now it's very simple. We know the amount. What is the amount? We know the amount. Okay, if we have to calculate interest, how will we calculate interest on drawings? We know the amount is 2000. It is withdrawn 4 times. The rate is 10%. We don't know the period. Okay, we'll have to calculate the average period. Now, in order to calculate the average period, we need opening balance, opening period. Okay, so what will be the opening period? Opening period is period left after first date of withdrawal. Okay, how much month is left after first day of withdrawal? See, when is first withdrawal done? First withdrawal is done on 1st Jan. Okay, 1st Jan, beginning of the quarter. So how many period is left? Basically 12 period is left, right? So he has withdrawn beginning of the quarter. That means he has withdrawn on the beginning of Jan. Okay, so if you count the whole month of Jan, Feb 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so the average, the opening period will be 12 months. Now if I talk about closing period, closing period will be period left after last date of withdrawal or drawings. Okay, so what is the period left? See, the last withdrawal is on 1st October. Okay, so 1st October to 31st October, 1 month. Okay, then the whole month of November and December. Okay, so basically 3 months. Okay, now I can calculate average. 12 plus 3 divided by 2 will be 7.5. Okay, so I find out the average period will be 7.5 months. Okay, now I can calculate my interest on drawings. 7.5. So what will be the interest on drawing amount? 2000 into 4 into 10% into 7.5 divided by 12. Okay, so the interest amount will be rupees 500. Simple and easy. Now let's move to the case number 5. This is a bit long, okay, but you have to bear with me. Okay, now see students, many students, what they will do is they will leave this concept. Okay, they will leave this concept, they will not study this concept because it's not at all tough. Okay, you just need practice, and I've told you logically, right? It's not possible to calculate for every month, so we will use average method. Okay, so now everything cannot be very logical. Everything cannot be like, oh, I get this is logic. Okay, so there are some few things which we have to remember. Okay, we have to apply logic that everyone, is it possible to calculate the interest on drawings for everyone? No. So the accounting standard has allowed us to calculate interest on drawings taking the average method. Okay, so we don't have any option. Okay, and this concept, mark my words students, it's very important. Okay, and maximum students will leave this concept. Okay, because they don't study this concept properly, but you will see this type of questions in the exams for sure. Okay, if you don't believe me, you just see the previous year questions. Okay, this year exam question, class 12 board exam question, you will find 3 or 4 marks question on this topic. Okay, so it's very important, and if you don't understand, you watch it 3 times 4 times, but you will understand eventually. Okay, so now let's move with the case number 5. Okay, only 2 cases left. Mr. Mohan again. Okay, I'm taking this example of illustration from page number 21. Okay, there is similar question. Okay, there is similar question, you try to solve that. Okay, and if you don't understand, you just write in the comment. Okay, then I will, this is C, question number 26. Okay, question number 26. Okay, this is same. Okay, you can try this. You can try this, and if you don't understand, you can DM me or you can comment in the video, and I will, if you want, if you request, I will make a separate video for this question. Okay, so now let's continue with this case. Mr. Mohan withdraws rupees 2000 per quarter at the end of every quarter. At the end of every quarter. Okay, rate is 10% per annum. Now let's do the timeline again. So here will be Jan, Feb, March, April, May, June, July, August, September, October, November and December. Okay, so this will be first quarter, this will be second quarter, this will be third quarter, and this will be fourth quarter. Now when is he withdrawing? See, he is withdrawing 2000 per quarter at the end of every quarter, at the end of each quarter. Okay, so he is withdrawing at the end. When is the end of each quarter? For the first quarter it is 31st March. Okay, 31st March. He is withdrawing 2000 here, he is withdrawing 2000 here, again 2000 here, and again 2000 here. Okay, now we have to calculate average period. Okay, what is the opening period? Okay, opening period is period left after first day of drawing. Okay, so if he's withdrawing on 31st March, what is the period left for the calculation of interest on drawings? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 months. Okay, 9 months. And what is the closing period? See, the last withdrawal is on 31st December. So will there be any closing period? Will there be any month after December for which we will calculate the interest on drawings? No, it will be 0 month. Okay, so if I have to calculate average, what will be the average? 9 plus 0 divided by 2, it will be 4.5. Okay, so 4.5 months. We will calculate interest on drawings for 4.5 months. So what will be the interest amount? So we have withdrawn 2000 4 times. Okay, so 2000 into 4 into 10% into 4 by 5 divided by 12. So what will be the answer? 2000 into 4 into 10% into 4.5 divided by 12. Okay, rupees 300. Rupees 300. Okay, so what is the case number 5? Last case. Okay, last case. Case number 5 is Mr. Mohan withdraws rupees 2000 per quarter at the middle of every quarter. At the middle of every quarter. At the middle of every quarter for the year ending. For the year ended 31st December. Okay, rate is same 10%. Okay, now this will be the last concept. Okay, this will be the last concept. Now let's again do the timeline. Jan, Feb, March, April, May, June, July, August, September, October, November and December. So 3 quarters here, 3 here, 3 here and 3 here. Okay, I know this video is a bit longer, but please watch it. Okay, it will be helpful for you only. Now see, when Mr. Mohan is withdrawing 2000 per quarter at the middle of every quarter. He is withdrawing money at the middle of every quarter. So what will be the middle of every quarter? It will be what? 15th of February, or you can say 14th of February. Okay, see, now let's try to understand. Okay, so Jan, Feb and March. Okay, Jan has, this is 1 month, this is 1 month, this is 1 month. Okay, so he's withdrawing when? He's withdrawing on the middle of the month. On the middle of the month. Okay, so this will be of no use for us. Okay, he's withdrawing on the middle of February 2000, on the middle of May, in the middle of August, in the middle of November. Okay, now let's calculate the average period. Okay, so what will be the opening period? Opening period will be how much? Can you tell me? See, here he's withdrawing on the middle of the quarter. Okay, so he's withdrawing on the middle of Feb. Now here is 0.5 months. If he's drawing in the middle, we will charge interest for 0.5 months only for the month of Feb. Here 1 month. Okay, here 1 1 1 1 1 1 1 1 1. So what's the total? 1 2 3 4 5 6 7 8 9 10 and 5. Okay, so it will be 10.5 months for which we will charge interest. Okay, and the closing period will be how much? See, the last withdrawal is on middle of November. Okay, so here is 0.5 months and here is 1 month only, so it will be 1.5. Okay, 1.5 month. So what will be the average? 10.5 plus 1.5 by 2, it will be 6 months. Okay, 6 months. Now let's calculate interest. Interest will be 2000 has been withdrawn 4 times, the rate is 10% and 6 by 12. So what is the amount? What is the answer of interest on drawings? 2000 into 4 into 10% divided by 2. It is rupees 400. It is rupees 400. Okay, so this is the concept of interest on drawings. Simple, right? There are 6 cases. You try to solve all this and you will be good to go with the concept of interest on drawing. Okay, now students, if you have watched this video up to this point, a request to you, okay, please share this video with your friends, okay, so that the students who are confused in the concepts will have a good knowledge of the concept. Okay, and this is not, I'm not trying to promote myself, but tuitions are still open. Okay, if interested students, you can join me. Okay, and we will enjoy the subject and we will score good marks in our exams. Okay, so I hope you like the video. So I'll be uploading video on, whenever I get free time, I will record the video and I will upload it for you guys. Okay, so I hope you enjoyed the video. Thank you very much. See you. Bye bye.